Most traders lose money not because they can't find entry, but because they don't understand where liquidity is hidden. But today, I will show you how to spot high probability liquidity and how to trade them. Welcome to Blue Traders. If you're new here, I break down smart money concepts in a very simple way so that you stop guessing and start trading with structure. Make sure you hit the subscribe button and turn on the notification so that you don't miss out on the next one. Let's go. So, what is liquidity? For me, I would say liquidity is where the money is hidden. That's it. That's it. So, where do you find liquidity? So when you do your studies and all that, they will tell you that liquidity it's at the old highs, old lows, section highs, section lows. That is correct. That is right. That is right. Right? That is right. But in this video, I'm talking about the high probability liquidity. And remember, I make sure I make things like very simple for you. Easy to spot, easy to trade. So what I'm talking about in this video is where to find those high probability liquidity levels that are easy to spot and easy to trade and can make you a lot profit, like a lot of pips. Okay, I'm sure you can see my screen, right? So, but we'll get back to this. So now, in the previous videos, I talked about order block and liquidity. Right? I intentionally started with those topics first because as time goes, we'll get into many things, Okay, so now we talked about order block and fair value gap in the last two videos that I did. So if you've not watched that, you should watch it. So now, this is a fair value gap and this is an order block. All right, let's just mark it out that inside here we have order block. Price has gone up, created this, and it's coming back to test it, and things like that. Here the same thing, price has created a fair value gap, and up we go. So let's take this out so that you pay more attention to what I'm going to show you. Okay, so now when we have a fair value gap here, think about this, right? Most times you see price will come to a fair value gap or order block multiple times, or price will spend hours in it and you get frustrated. Don't worry, I'll sort that out in this video for you. Okay, I'll sort that out and you start taking advantage of that instead of you looking at it that, oh, what are they doing? Like, oh shit, oh, what's good? No, you're gonna start taking advantage of it because I do take advantage of it. Okay, so now you have a fair value gap and price comes to that fair value gap and reacts once. Now you have a liquidity. You have a very high probability. This is your liquidity now. This low here, it's your liquidity. Okay? This will help you know that the next move is not going to break price. Even if it does, then cool, fine. It does it like once in a while. Right? This will help you know that when the time is not right, this will be your liquidity. And then when the time is right, you want to trade this. This will be your important liquidity. Okay? So the same thing goes with the order block. When price is there or playing around, when the time is not right, what I mean by when the time is not right. Let's say you trade during New York section, right? And you start seeing price come here, maybe during Asian section or London section, and you're bullish. Okay? So whenever price come back to it, it's just coming back to sweep the liquidity, nothing else. That is only what it's coming back to do. Sweep the liquidity. It doesn't matter what time frame it is. It's coming back to sweep the liquidity and continue going up. Yeah, I said it doesn't matter what time frame it is. But when you focus on this on a higher time frame, it will help you with your long-term direction. It will help you catch a better risk to reward trade. It will help you hold your trade longer. Okay, so let's go to the chart. Let me show you many examples. All right, let me show you many examples. This video, right, it's a very powerful video because it will change the way you look at liquidity. It will change the way you look at liquidity. All right, so see here, all these things are all trades that I took. Okay, I come in here every week, I use the trades that I took, and I show you, I teach you and I show you things based on the trades that I took. I call these things out in my free Telegram, channel, and also, of course, in my mentorship. All right, call them all out. You can see the proof by yourself. Okay, so see here, just as I did a call out here, because some traders might be wondering, like, why is he saying we're still bullish? Why? Okay, when price was at this level here, at this level, okay, when price was here, okay, price was here, I started looking for liquidity because price reacted to this once and it was already almost closing time, so I don't take trades at that time. So only two things can happen. It's either price play around this level, okay, or we move and then create another zone where we can trade off from. Trade another zone. Then we can trade off that zone. See, when you start seeing price, that price is not running to anywhere. It's not run, even if price run 100 pips, 1 million pips up, right? That is not the end of it. It will still continue running up or maybe retrace back. So why FOMO? Why are you trying to chase price? That, oh, it's going to leave me. No, bro, it's not leaving you. Think about it. Let's say you didn't trade for like past 5 months and now you're back. You're still going to trade. You still going to trade. The market didn't go anywhere. You're still going to trade. That's your strategy. You get what I mean, right? So stop thinking like that. Oh, what if he leave me? No, if he leave you, there's another boss, okay? So it's either price move like this or we move up, all right? And when we move up, of course, you're going to see another level to trade off from. So anyways, so if you look here, we had an order block before the market closed, okay? So let me go on 4 hour and show you the order block again. This was the order block here. This was the order block. You can see how many times price did its thing inside of it. You can see how many times it did its thing inside of it, and we still went up. Okay, the first time that price came inside on this same time frame, the other one that I showed you was a lower time frame, okay? On this same time frame, which is 4 hour, the first time that price came inside of it and didn't make any effort of going back up, it just wick up and all that. All you just have to do is that, okay, price is not ready yet. There's no confirmation and the time is not right. I mark out this as my liquidity. That is my liquidity level. So if price wants to continue going up, I expect it to sweep this liquidity and we continue going up. You might say, why not this one? No, this one is not the liquidity because this one didn't react to any fair value gap or order block. Which one reacted to a fair value gap and order block again? This one reacted to a fair value gap and order block. This level here. I don't know exactly what they did here, but I take it that this one reacted to it. We checked some other broker reacted, some didn't react. So anyways, we're talking about this level. So you can see we now have the sweep. This is actually a trade that I took, a trade that I called out. Share it, share everything. This was the secret, okay? So you can see now when you go on the lower time frame, what can you see? This is a clear sweep of liquidity. Even if you're trading CRT, you're trading total soup, you're trading whatever you're trading, you need this. You need to know where the actual liquidity is. This is not about section high or section low or previous day high or previous day low. This is something that I started seeing in the market and started paying attention to it and started studying it. Now I'm sharing it with you. Okay? I didn't learn it from anywhere. Of course, ICT, I learned ICT, but when you learn all those things, then you have to go deep and try to find something that really works. So you see here now, What did price do? When price was ready, when was it ready? It was during London section. So at London section now, you can see, let's say 2 a.m. At London section, we swept that low. Swept it, then price started going up. Okay, we swept it, and we had the market structure shift here. Market structure shift was at this level here. We had it at this level. We had the market structure shift at this level, and price started going up and went back to the highs and took out the highs. And you can see how we consolidated here, showing you that there's something there, and continue going up. Okay, you see how it's easy to spot it. Okay, so I'm going to show you another example. Okay, so it won't look as if I just picked this one. Yes, even if I just picked this one, this was a trade that I shared before it happened. Before it happened, I started looking at these levels here, but they didn't make sense to me that much. It didn't make sense to me, but I started paying attention to it. So when this didn't happen, I actually said it in the group that the time wasn't right. The time wasn't right. So we just have to, start afresh again and look for it. So this is me starting afresh to look for it. Marked out this, and that was it. Okay, let me show you another example on 4-hour time frame again. So here, what do we have here? Let me take out this first. What do we have here? And this was FOMC. FOMC. I closed this trade yesterday after holding over 2 days. I closed it yesterday here. So what do we have here? Look at here. We have an order block here. Okay, we have another block here. We have an order block here. Why is it an order block? Because this candle closed above this. Okay, so you can mark this, you can mark this, you can mark however you want to mark it, as long as you mark it from this high, actually from here to here, that is the thing. But I like to mark it here sometimes. So which low is the lowest low inside of this? There you go. There you go. This one. Okay, this was the lowest low here. And what did price do? At the right time, price came to it. When was the time? FOMC. FOMC, price came to it, and boom, there we go. Up we go. All right, so let's show you another one. So here, what do we have here? We have, you will see this thing repeating over and over and over again. If you can just mark them all out and wait for it whenever price come back to it. But you know traders, they can be patient and wait for price whenever price comes to it. You will see it will increase your win rate. What was the lowest low here? Before this low, before this one, which one did we have? We had this one here. We had this one, and price came, took it out, and continued going up higher. Okay? You will see these things repeat over and over again. Of course, if you go on lower time frame, you will still see it's going to be the same entry. It's going to be the same entry. All right? It's going to be the same entry on 15 minutes. So, you see, this was the first time price came to this fair value gap. I remember this trade because price took me out. I took a buy here. I took a buy at this level on this candle. Added one more buy here, and I was targeting this high. And unfortunately, price didn't get there. We move on to the next one. You understand? We move on to the next one. So, but I was still bullish anyways, and price swept this low. Okay, that's when I had my second buy. From that level. So we had the fair value gap somewhere here. So then price continue going up. When you look at this, right, you see that price repeats the same thing every time. Every time. Just find your key level. Find your key level that aligns with structure, that aligns with the order flow. Okay? Find those key level that aligns with the order flow. Then do whatever you have to do inside of those key level. Inside of those key level comes your high probability setup will form inside there. Your high probability liquidity will form inside there. The sections, that is where you want to trade the sections. That is where you want to put your stop loss. That is where you want to do everything. You understand? That's where you want to do everything. So I think that is it. That is it on this topic. Then let's dive into a little bit trade review. I think with what I taught you now, it's already a trade review also. So the trade review, because if you add up the fair value gap that I talked about and the other block that I talked about and the liquidity now that I talked about now, right? That I'm talking about now, then you will see how you could catch these trades. Okay, there's something else. There's still other topics that I need to talk about. All right, there's still other topics that I need to talk. There are many. I put everything together and be able to trade Nasdaq, especially Nasdaq. It work on other pairs too, especially gold. You can try it on gold. You can try this thing that I told you now on gold, but I will make a separate special video for gold, both the entry and everything. I'm still working on that. Okay, I'm still working on that. So, but this strategy that I told you now, this is what I use on gold. Go on gold, like I use nothing else. This is what I use on gold. All right. So, so if we look at last week, right, we can see the FOMC. FOMC was from this level here, from this level. Why this level? Why not this other block? Because this already given us a bearish move. We already had a bearish move here. Okay, so this bearish move needs to take out a low since it's a bearish. All right, so price goes from price goes from internal to external. Always remember this. All right, so when we have this, when we have or you can also say the market maker model. You understand where they say this is the consolidation and all that. But just know that some things can be a little bit confusing. You understand? I know all those stuff, but I just don't mention them in my videos. I don't mention them in my teaching. I try to use the most simple one that you can understand. So one thing that you just have to know is that price go from internal to external. All right. If we're on a downtrend, target those previous lows. Those are where the liquidities are. Think about this like this. When this buy was going up, where were the buyers? If you were buying from here, where will your stop loss be? Down here. When we're selling, we're targeting the stop loss. When we're buying, we're targeting the stop loss of these people here. All right. So all these levels where you think like the stop loss were, at least target one. When price start coming down now, okay, when it start coming down, let's see, maybe we're going to create some other block here to go up. When it start coming down, it's going to target this other block here. The down of this swing low. That's what it's going to target. All right. Then before you start looking at this other target, and when you go on the higher time frame and you see that there was a displacement, then that will mean that we need to have a pullback to continue. But if there's nothing on the higher time frame, bro, this is just a liquidity sweep. Okay, it was just a liquidity sweep. Anyways, let's get to this. So during FOMC, we could see that price swept this liquidity. Okay, then when you go on 15 minutes, you still see the same thing. It's the same entry. Go on 15 minutes, you want to wait for the 15-minute market structure shift. Okay, so this is a market structure shift. As you can see here, price closed above this bearish candle, also giving us a fair value gap. Okay, giving us a fair value gap. We don't need to see the inversion and everything because we're coming from a high probability level. Okay, and price reacted to this and up we go till we get to this level. Actually, I closed my trade yesterday at this high. After we had this pullback, price got here because I had more buys here. I had a buy here. Excuse me. I had a buy here on different accounts. Then I had, yeah, of course, I had some buys from here. I was scalping. Had another buy here. Then I took a loss here. A loss here because of this pullback. Price pushed up and pulled back. Then I took another buy here, which I closed all my trade. Everything here. And yeah, I took a little bit scalp here. It felt like I was over trading, but no, I'm just going with the direction. You understand? Once I see price is going to that direction, it's still going to that direction on high time frame, bro. I'm taking my trades. I'm taking my trades at the right time. Once I see them Once we already start going up again, boom, I start trading. Okay, so this was the FOMC trade. There was nothing. See, one thing about news, right? Okay, let me tell you something, because you guys will see me that I do trade news sometimes. No, I actually don't trade news. I trade my setup. Okay, so don't get it twisted. I trade my setup, and I expect you to do that same thing when you have a high time frame setup, because the news come from a high time frame key level. Either it's gonna sweep liquidity. See, most things that news does is right? Let me tell you one of the favorite news setup. When you go on a higher time frame on a daily, look for a daily key level, maybe mostly fair value gap. When you get that fair value gap, right, look for this liquidity level that I've told you now. Look for it inside of that fair value, of that daily fair value gap. Once you see it, mark it out. Mark it out for that week where there is high impact news, and wait for price to come to it and do its thing. Bro, you see this thing that I explained to you now? If you even do it just once a month, you're good. You don't have any problem anymore. Once a month, because it happens. But of course, look for it every week. Once a week, you can see this setup that I just explained to you now, once a week. This liquidity level, look for them. I've already told you where to find them. Find them there and mark them out and see how price reacts to it. Okay, so this was, I think I did a breakdown of all these trades. So this came from order block, and this other one came from a fair value gap. So yeah, guys, if you enjoyed this breakdown and it helped you to identify these liquidity levels, you can comment liquidity, comment liquidity on the comment section, all right? And tell me what you want me to do next on the comment section. If you have a question, ask me on the comment section. You never know, your question will be the one that I will use on the next video. All right, do enjoy the rest of the weekend until I speak to you again. Peace.